Greetings, ladies and gentlemen. Welcome. I am the CryptoCrow, and I'm going to be doing a series of videos. Now, I'm not sure yet if I'm going to combine them all into one big chaptered video, or I'm just going to do them as separate videos. I guess it depends on how long it ends up being when I'm done with all of this. But I am going to be doing this in phases, and what I'm going to start with is why I believe the peak of this market cycle will be probably late October, and I'm going to show you some charts, and I'm going to show you a lot of different elements of this, how the cycles have been, how they've been kind of changing, but not necessarily in the way you might think they do. And we're just going to go over it by the numbers, right? Because there's so much noise in crypto and everyone has an opinion, right? And that's okay. But anytime I feel like I'm bombarded with noise, I go back to the data, and I go back and I look at the history, and I line everything out, and I take all these notes, and then I come up with my own conclusion as to what's happening. I was dead right last market cycle, okay? And I know I say that a lot. But this is going to be a series of videos, or at least chapters, we'll see. But I know I'm going to be going over the long-term changes in the cycles, where we're at and where we're going to be, most likely. Then I'm going to go over how things compare to the NASDAQ of 2007. Then I'm going to get into price peaks and the differences between Bitcoin's price action. It's like bottom to peak, peak to bottom, as well as Cardano, and how Cardano does the same thing. And if there's a correlation between Bitcoin's price, dominance, so how does the dominance of the various altcoin assets, how does that change as Bitcoin's price rises, dominance falls in Bitcoin? We're going to cover a lot of this stuff, and there really shouldn't be any questions. Well, there will be, hopefully, I guess there are. But I'm going to try and answer as many questions that you may have in this little collection of videos or chapters. So let's go ahead and get started. We're going to start right now, and we're going to look at Bitcoin in basically in the long-term scale of things, okay? And if you look here, we're starting this all the way back in the 2013 halving. And I'm not going to zoom in because it's not really relevant, but from this red line here, these red lines are all halvings, okay? This is the period in Bitcoin cycle this is hard-coded into Bitcoin, that every 4 years, based on hash rate, how much hashing power is going into how many miners are there and how powerful are those miners. Okay, that's what the hashing ultimately boils down to. And as the number of hash miners go up, the difficulty can get more challenging. So no matter what happens, the algorithm of Bitcoin keeps this pretty steady. Okay. So it does, if there were, a million high power, 1,000 terahash miners out there, then the difficulty rating there are like these difficulty bombs and all these different things, I guess, that happen. Now, the green lines are the peaks of each market. So if we look here all the way back, this is all before institutions. Okay. I would say everything leading up to 2017, this is all pre-institutional involvement. Now, you could say, well, the institutions were probably always involved. It's likely that a lot of the alphabet agencies started Bitcoin to begin with, as we started a transition, because they knew, we're leaving this we're going to leave the gold standard, and then we're going to spend a bunch of money, and then we're going to basically filter out of that into a new system, which is where we're at now. The transition is happening right before our eyes. Okay. So, and they say like every 100 years, a grand regime, or, like the Romans, everything that goes up ultimately comes down, right? Unless you can change with the times. Well, we have the technology today to change with the times, and that change is happening on a global scale. Some are fighting it because they like the control they have in the old ways, but I think they're losing that fight. And we're going to see that fight continue, I'm sure. So anyway, you can see this red line here. This is the halving to the peak. This was roughly 364 days between the halving in 2013 and then the peak. No, that's not it. 2012, sorry. So the halving to the peak, and that was it was basically a year, okay? Now, from the peak to the next halving, You see this long situation here, okay? But then we go to the next halving. This is the halving of 2016. Well, moving into 2017, we had this huge parabola, basically sending the price crazy high very fast. I mean, the price was all the way down here, like $400 at one point. If you want to go to the bottoms, I mean, it was like $100, and it went from there to $20,000. Huge gains. I didn't chart out the price difference here because that's really not as relevant. There are diminishing returns overall, but when things start into the thousands of percentages in growth over a very short period of time, that diminishing return still doesn't mean that much. But from having to peak in 2017, 2017 is where the institutions officially announced they're getting involved through the CME futures launch. Okay. And then of course they ignorantly took credit for like taming Bitcoin and all those bullshit narratives. It was nonsense. We all knew it, but they love to pat themselves on the back. And I don't know, the whole thing was kind of funny in hindsight. But anyway, so then there were a lot of newcomers in the space. So a lot of people didn't know any better. They didn't know, a lot of us were still learning about these cycles then. But 518 days. So you had 364 days to 518 days. So that distance basically extended from the halving to the peak. Now, if we look at this is 2020. So in May of 2020, we had the halving. The peak of that market in 2021 was 546 days. So it started to settle, okay, but it's still expanding. You go from 364, 518, from 518 to 546. Now, the difference here is this was the two peak cycle. Now, if we were to take this and go to the April peak, okay, which would have been, it was April 13th. If we take it back to around there, it was around 300 days. So that was a premature peak that actually triggered several indicators. And I knew the market was not over. I knew it wasn't over. And we're in another video, we're going to go over how this all compares to the NASDAQ from 2007. So we're going to cover that in detail here in the next chapter of the next video. But everything is obviously extending, right? And this was broken up intentionally. I do believe this was intentional. I do believe that this was a major market play by institutions, by the futures market. This is what was happening in the grand scale of basically leverage and a lot of these other vehicles that were used in trading this asset. And it kind of broke things up. This should have been one big parabola, if you want to call it that, and if it weren't broken up, and we probably would have ended up somewhere closer to $100,000 is my guess in this market. But we didn't get there because the market was playing its games. Now here we are. If we take this 78 bars from having to peak, and we were to do the same thing here, everybody's talking about how this market is extending, right? And that, we're going to go into 2026 and we might be in the first or second quarter of 2026 and all this other stuff. I call nonsense on that. I do not believe that that is the case. And I'm going to explain something to you at the conclusion of this that I think is going to put things into perspective. But ultimately what we're looking at here is from having to proposed peak 546 days puts us in October, roughly, October 20th, maybe towards the end of October, if we want to get a little bit of an extension on this. This is where we're at now. And you can see that, we're roughly around somewhere like this. A lot of this stuff was thrown off because of the all-time high prior to the halving. This threw off everybody on a psychological level, and that's basically what's played out. Okay, so we had this, this is when a lot of these spot ETFs started entering the market, and everybody thought, oh my gosh, these spot ETFs are going to change the world. They're going to send us to the moon overnight. There's going to be supply shock overnight. I mean, all of us were kind of like, what is going to happen, right? Well, that wasn't the case. We peaked out here in March of 2024 and started working our way back down. where we bottomed out at around 48, 49,000, and then we started working our way back up. Now, we've got a lot of this ebb and flow here in the market. The question is, how high do we get in by October? And, you know, some people are saying that this is going to continue moving through this market cycle and head into 2026. I'm not saying it isn't possible, but I'm saying at the very least, we're going to get a substantial fake out come October. And I do believe that, like the 2021 market, I do believe that we're going to basically see kind of a fake out. Some of these market peak indicators are likely going to trigger. It's going to trigger a lot of people to sell. The institutions could then buy that up on a discount, especially Michael Saylor. We know he's going to be there with money in hand, ready to continue accumulating. So whatever is sold at this point is going to get bought up. I, for one, am not selling my Bitcoin regardless of what happens in here. But I am going to be selling some of my altcoin positions, and I'm going to explain that in a future chapter or video here as a part of this little mini series. So as it stands right now, from where we're at today, we're looking at about 24 bars or 168 days left in this market cycle. So basically about 6 months. We're about 6 months from the peak of this market cycle as we head into October. A lot can happen in 6 months. Okay, a lot. Let's say this was November. So you go 1, 2, 3, 4, 5, 6 in May. So from right here, this would be about where we're at. Okay, so just that time frame could be where we're at right now. And if we want to measure that, just to get a little bit of an idea, let's say we go from a bottom here to this top here, that's 142%. Okay, I'm not saying this is going to be exact, but I'm just kind of giving an idea. This here could very well have been this. So this, we could even expand this out a little bit and just say that, you know, this is where we just were, and now we're moving up. If that's the case, you know, let's say 140%. Let's just say we still get this 140%, which is, it's very, very likely. But let's say it's 140% from this low of 75. 140% would effectively take us to around $180,000. Okay. And don't kid yourself in thinking that this is not possible. It absolutely is. Not only that, but I think it's likely. Not only that, but I think we could very well surpass this. But because this is so choppy, leverage traders, margin, all of this stuff, futures markets are changing the game substantially because we have the markets moving in favor of wherever the most liquidity is sitting. So if on our way through here, you know, the price is, you know, maybe we've got, you know, $200 million in liquidity sitting at a lower price point, but we've got 300 million up here. Well, it's going to come down and then go up. All of that is breaking up the volatility overall of the price action, which is going to limit not only the bottoms, but the tops, because it's breaking the market up more and more as institutions enter the space and more billions of dollars are entering the system, trading at leverage. You know, they're hedging, they're doing so many different things, which is ultimately, in a sense, as they explained back in 2017, taming the market. So our expectations of these insane, you know, 500, 600% gains, these big parabolic skyrocketing rises that are melting faces overnight. You go to sleep, you wake up tomorrow, and what was, you know, $1,000 is now $50,000, and you're like, holy cow, I'm rich. Those days are numbered. And I do believe that the markets are changing. But I'm going to go over this now, because this is what I did. As I lined out this chart, okay, with all these numbers and time frames and differences, I took a screenshot of the whole thing and I sent it into Grok. And I said, Grok, explain to me the differences, the variations, the extensions in time. And in summary, Grok basically said that from having to peak or bottom to peak, it's roughly about the same, but it's dependent upon the hash rate, as we discussed earlier. But what's being extended are the time frames within the bear markets. So the bear markets are extending, okay, but that's just the time within the same cycle. But that's just the time within the cycle that the price stays lower or continues to fall. And so that's interesting. An overall observation, the bear market phase, peak to bottom, has extended from 189 weeks in the first cycle to 206 weeks in the third, an increase of about 9%. This indicates that the correction phase after a peak is taking longer as cycles progress. Whew. The more I talk, the more I yawn. Why cycles are extending. This is important. Several factors contribute to the lengthening of Bitcoin's market cycles. When it says market cycles, it's not necessarily having to peak, but these in the bear market periods. As Bitcoin matures, its market dynamics shift. Early cycles from 2012 to 2016 were driven by a smaller, more speculative retail investor base with less liquidity, right? Less liquidity means movement in the price is much more powerful, okay? Because what it's saying is like right now you can go to an order book and it might take you $50 million to move Bitcoin's price by $500. But back in 2012 and 2016, $50 million could have moved Bitcoin's price by like $1 million, right? Like it would have been insane because those order book, you call it order book walking the books. You know, I might want to buy, $1 million worth of Bitcoin. But if I just do it as a market buy, well, I'm just walking those order books all the way up. I'm moving the price up as those orders are being filled up to $1 million. So let's just say if Bitcoin, for example, let's just say like the order books in Bitcoin, maybe there's $1 million in orders, but maybe every $100,000 Bitcoin's price goes up by $1,000. So I'm walking those books, raising the price. This is why I cover the over-the-counter volume and the over-the-counter liquidity, basically. How much Bitcoin is available over the counter? Because what's going to happen is once that dries up officially, because there have been so many U.S. states or the U.S. government and all these other countries, they're buying up all the Bitcoin they can. And we've been watching a steady downfall of the available Bitcoin on the market. Over the counter, because they're buying over the counter so that they're not moving the price up on themselves. Okay. Personally, I hate over the counter trading, but if I were buying like $50 billion worth of Bitcoin, I'd be very grateful that it existed because I'm not having to walk those books and move the price up on myself as I'm just trying to make a buy, right? That is also a big part of liquidity. The more liquidity in the space, the less those prices fluctuate with larger orders, whether you're getting in or you're getting out. And we're seeing that taper down and basically be, as they said at the CME futures launch in 2017, we're taming Bitcoin. We're going to tame this beast. And effectively they are, because that's ultimately what's happening. The diminishing halving impact, the halving's effect on supply shock decreases with each event. In the first halving, the block reward dropped from 50 to 25 Bitcoin, a 50% reduction in supply. By the fourth halving, the reward dropped from 6.25 to 3.125, a much smaller relative impact on total supply. These are all the things playing into what is perceived to be the extended cycle. Since the circulating supply is now much larger, this reduces the immediate price catalyst, stretching out the cycle, but it's really making the bear cycle a little bit longer, but the bull cycle is staying about the same. Slight increases. Adoption and awareness. As Bitcoin becomes more mainstream, the influx of new buyers slows. Early cycles saw rapid adoption by early adopters, leading to a sharp price spike. Now, with broader awareness, the growth in new users is more gradual, leading to longer accumulation phases before peaks. And there are a lot of different factors, though. Liquidity and market depth. Increased liquidity in Bitcoin markets via exchanges, ETFs, etc., means larger capital is needed to move the price significantly. Yeah, it's a lot more difficult to walk those books. You need a lot of capital to make the price move, whether it's to the upside or the downside. This results in slower, more drawn out price trends compared to earlier, less liquid markets. And then there's psychological, behavioral. That makes a lot of sense. As Bitcoin's price grows, holders may become more patient, holding through dips rather than panic selling, which can extend bear market bottoms. Similarly, FOMO-driven peaks take longer to form as skepticism and profit-taking spread out over time. So this is doing a really great job at explaining everything that I've laid out in that chart in a way that's very easy to understand for all of us. It's things feel like they're extending because things are taking longer to happen, but the end result ultimately ends up around the same time in the same place. The only difference is that likely we're not going to get these substantial overnight volatile spikes in price, nor are we going to get these substantial drops, which is why I've said recently in a video that, you know, we could get like a pi cycle top indicator saying that the peak is in. We could get a confluence of a lot of these peak indicators. And then we're going to think, okay, the market's over. A lot of people are selling. Well, while we start selling, the institutions are going to continue buying up. That may very well be the time when supply shock really starts to kick in for the 2030 cycle. But because of the reduced volatility, we don't go down 80% like we're used to seeing. Maybe we drop 40. That 40% is very common in a very volatile market cycle, which is what we're used to seeing for a decade or more. So, but we might not get that. So we might come down 35, 40%. Everybody's like, see, it's not going back up. And then like a light switch, it starts turning around. So it could very well start turning around because the institutions start buying in at those price points. So it's going to be a very interesting cycle to say the least, but you know, so far things aren't changing dramatically, but they are changing. But I think ultimately where we start and where we stop are roughly very well in line with the market cycles so far. So in the next video, I'm going to go over how the price action of Bitcoin compares to NASDAQ, why Bitcoin is now, I mean, in 2021, I told everybody this lines up very cleanly with the NASDAQ charts from 2007. I just said it again on Twitter. Well, I'm going to show everybody what I'm talking about because nobody talks about this, which blows my mind. But we are starting to see pundits on CNBC or CSNBC or whatever. We counter trade all the time. But, you know, we're starting to see these folks start talking about Bitcoin and the altcoin market and the crypto space overall as the new NASDAQ. And I really believe that a lot of the trends are being established by the same people that control the NASDAQ markets, and not just the NASDAQ, but a lot of these other markets as well. This is also why I look at the Wyckoff patterns a lot. The Wyckoff, you know, accumulation, distribution, right? This ebb and flow of the market cycles that can be lined out pretty textbook. I believe that that's because that is the playbook by the institutional traders that are working these markets in confluence with the market makers. And so when you start taking it down, you know, the price action and the way these markets move, you know, segment by segment, but then you extrapolate it out, that is how you can see why it's matching up very similarly to the NASDAQ. This is Wall Street. This is institutions. They've been in the space for a lot longer than they say they have. When they were telling everybody to stay out of it, they were working their magic to accumulate already in preparation for the new investment vehicles they already knew were coming. So that's why it's like anytime anybody says anything in the media, pretty much about anything, they're just a talking head. They're probably lying. And that's just the way I look at it. Okay, so this is going to be interesting because I honestly could not remember exactly what the hell I was looking at in 2021. So I've got two bars patterns here, and both of these are from the NASDAQ. Okay, and if we try to look at this, I'm telling you straight up, I just don't remember exactly how I was looking at this. It's been so long. But what I want to point out are a couple of things. Number one is I took bars patterns from all the way back from 2017 or 2007 rather. Sorry. So I started here because I know that's where I was starting. And I'm thinking that there are so many double peaks in here. I can't remember exactly which one that I was seeing, but I know at the time I saw something very, very clear, which caused me to say this is going to be a 2-peak market. I cannot remember. It might have been these two here in 2012, but I'm not 100% sure. But the point is that I'm going to make is I took 2 bars patterns, one from 2007 all the way to present day. Okay, so all of that. That one is this red line. You'll see now we're pretty much step by step for step, whatever you want to call it. Okay, we're very well in line with what's happening here. But you'll also see that when the Bitcoin bear market was in effect, the NASDAQ was still doing well, almost as if they let go of one to focus on the other, which makes a lot of sense because the NASDAQ isn't controlled by halving, supply demand in that sense, the same sense that Bitcoin is. So that makes sense. Now this one, the yellow one, I stopped that at right about here. So it goes from 2007 to here. And I tried to line that up with these 2 peaks. I still don't think that was it. If anything, I'm almost wondering if it's these two that you can kind of see. I'm thinking it was this one. So this is basically, yeah, I mean, this looks like that would have been what I was looking at the time. And we were heading into this, and this was, around April 13th. I'm like, the market just peaked. I said on Twitter, and I said, but this is probably going to be a 2-peak market. I could be wrong. And it's still there. I mean, you can verify that if you think I'm full of it. But anyway, this is what I was looking at. And so, and even if you were to look at how that lines up, that's still playing out pretty well. And if you were to look at this, even if we were to, that lines up incredibly well, given where we're at in this cycle, how we're working our way back up. If just leaving this way, this is saying, maybe in March of 2026, we peak and then we start falling, we get a fake out, right? Maybe this is what plays out into 2027 because of the way the NASDAQ functions, the Wyckoff, all of it, everything going on. Maybe this is a projection to the future. I don't know, bookmark that and we'll see. But ultimately, this was the point I'm making, is that the price action starts to match up. Now, what happened is, though, we didn't start getting a lot of this until 2017, this was the peak of 2017. So this is really when things started to line up and started to change because of the futures markets. And you'll notice that a lot of the ebbs and flows, you can see everything is kind of forming up. It's taking time. But the way everything is starting to match the NASDAQ more and more as time goes on, until we got into our official bear market. And then they basically said, okay, this one's done. Let's focus on this one. And it was like a transition, a changeover, if you will, in terms of where the liquidity went, what was done with it. It's almost uncanny, at least to me. Maybe I'm crazy, but I see this and I look at it every now and then, and it just reminds myself, where are we going? Because anything prior to this, the CME futures wasn't even in the situation yet. So it was very, now we could expand that, right? But there just wasn't as much liquidity in the market. There wasn't as much happening, even though we were getting substantial price fluctuations. It was because there wasn't that much liquidity in the market. But the more liquidity entering the space, the more the price action blends and matches very, very cohesively with the NASDAQ. And I think this is going to continue tightening. When I say tightening, I mean the price action of everything is going to continue lining up almost identically, because I believe in the not so distant future, I will say between now and 2030, the NASDAQ becomes the crypto market, in the sense that all of those assets on the NASDAQ will be tokenized, and this will all become one. And I think that they've known this for a long time. This is the change that's happening. And quite frankly, they're moving the markets. It's almost like learning to dance. That's the easiest way I can explain this. I feel like the institutions, they just started this new dance with this new asset. And the better Bitcoin and the crypto markets get at learning that dance, they start becoming as one on the dance floor. And I say that because I listen to my wife talk about dance all the time. And so it's the easiest reference I can make to explain why this is happening and where I think it's heading. And that's it. I mean, it's as simple as that. You can do the run a bars pattern and play with it yourself. See if you can see how things align. But that's basically what I'm getting at in terms of how everything correlates very strongly and continues to get stronger as time continues. Liquidity continues getting into the market. And we're just, I really believe, and I think if you were to take all this and break it down, you know, day by day, week to week, month to month, you're going to see how much this all lines up with Wyckoff accumulation and Wyckoff distribution patterns. I mean, it's uncanny.
He was just a 13-year-old tinkerer with a garage full of broken bots until he found the message that changed everything. Now, Billy is thrust into a high-stakes adventure that will test his genius, his courage, and his heart. Billy embarks on a journey through scrapyards, hidden cave systems, and mysterious tech cults to uncover the truth. To save his father, Billy must do the impossible. Robots will clash, secrets will be revealed, and a boy will discover the legacy written in his circuits and his soul. You'll love Billy Boltz and the Gears of Fate, inspired by true life events of the author.
Okay, so now we're going to look at Cardano, and we're going to look at Cardano, its price action during the peaks of 2021, the first and the second peak. And then we're going to look at Cardano and Bitcoin dominance and how that fluctuated a bit. We're going to break this up into a couple of segments because it gets kind of detailed. If we look, we can see here, this is the halving all the way back in May of 2020. And you've got 540 days until Bitcoin's second peak. Okay. And this is Cardano. All right. This chart is of Cardano, but it's interesting to show when Bitcoin got its first peak on April 13th, Cardano's price rose another 165%. Okay. So when Bitcoin peaked, Cardano was sitting at about $1.33, which interestingly enough was its all-time high back in 2017. It was exactly $1.33. So here we are with Bitcoin peaking and Cardano sitting at $1.33. So I'll be very interested to see what happens. Does Bitcoin peak with Cardano at 333? At this market? I'll be very curious to see how those numbers play out. And then we rise up because it rose up. ADA went up 165% over this period of 33 days. So a month after Bitcoin peaked, Cardano rose 165%. Okay. So I find that very, very interesting. And then when ADA peaked, it came back down. Well, then we were preparing for the second peak in Bitcoin. Well, what's interesting is that Cardano rose up and peaked again prior to Bitcoin's peak. So this is very confusing. It was almost like an inverse of itself into Bitcoin's second rally. But prior to that, after it had bottomed out, so it rose all the way up at this point to about $2.44, came all the way back down to $1 before it rose up another 197% until it fed into Bitcoin's next peak in November. So it's very, very interesting, but there was a lot of ebb and flow going on between these assets. And so, but if you look at it overall, if during this whole time frame, if we wanted to look at just the price range, let's just say from the December of 2020 bottom to the peak, Cardano rose over 2,000%. Okay. Over 2,000%. And that was all after the halving. So if we were to look at this period here, let's just say this is the bottom. And I'm curious if this lines up with anything else, because this is kind of off the cuff. But let's just say we had Bitcoin's halving here. We take it from this bottom and then we go up 2,000%. Where does that put us? Oh my God. Go figure. Right around $7. So yeah, I mean, when I say $8, I'm hoping, I'm planning. I've been predicting an $8 ADA for years now. You know, everything, no matter what I do, always ends up right around that area. You know, so I generally just say, you know, I'm expecting between $5 to $8, but there's a major caveat to this. All of this leading up, all of this price action, all of this, you know, Cardano going up. We're going to look at Cardano against Bitcoin now, but none of this is taking into account what's coming for Cardano and Bitcoin in this market. And that is, as Bitcoin's dominance grows, its market cap grows, the liquidity available in the Bitcoin ecosystem. What happens when we've got a direct line when Cardano and Bitcoin users are able to use the same wallet and access the Cardano DeFi ecosystem using their Bitcoin without a bridge? Between Bitcoin OS and IOHK's version, what happens if Bitcoin's market cap reaches $5 trillion, $10 trillion over the next 6 months? Will that happen? We're going to look at that. But effectively, I definitely think we're going to go far and above the $2 trillion in Bitcoin liquidity we're looking at now. Let's just say it's $5 trillion. If we've got a $5 trillion market cap, what does that look like for Bitcoin in price, but also in Cardano's price? So there's a major Cardano price prediction is likely at the end of this whole video. But let's look at what happened with Cardano against Bitcoin. You can see here at the halving, Bitcoin's dominance was 66.32%. Interesting, because that's about where we're at right now. It's a little lower at the moment. But ADA's dominance was only at 0.63%. And this was at this red line here. And so, you know, we could see the price change. If we go from the bottom to the peak, this goes into September. So this was Cardano's peak against Bitcoin, mind you, because this was Bitcoin's second peak here in November. But it came up a total of 1,000% against Bitcoin. So from the low to the high, Cardano came up 1,000%. And here's what's funny. It wasn't until this area, right around here, where Cardano finally launched all of its major, like a lot of its major functionality on chain. So we didn't even, I'm pretty sure it's been so long now, I get things confused, but I'm pretty sure we didn't even launch smart contracts on Cardano. I'm pretty sure leading up to this point, all we were really able to do was stake our ADA on a wallet and generate a passive yield. That was it. And as beautiful as that was and is to this day, we still didn't have smart contracts until the market peaked overall. So all of that wasn't even happening. It had no total value locked. It basically had none of that. And it still rose up 1,000% over the Bitcoin. So moving into this market cycle, it's going to be very, very interesting to see how that plays out, because you can see here, I mean, we were at lows. This is after the halving. We were at lows. This is probably about where we're at right freaking now in the grand scheme of things. We'll see how it all plays out. But you know, we've got a long way to go. Let me see, what does 6 months look like? I'm always generally curious when I get a wild thing. But let's say, what does 6 months look like? I mean, it would make sense. It would make sense if we were somewhere around here, 234 days. So let me see here, 234. Let's just divide that by an average of 30, and we're looking at, that's about 7.8 months. So interesting. So yeah, I mean, maybe we're somewhere around here. I mean, any way you slice it, Cardano is going to do very, very well, even against Bitcoin and Ethereum by the time a lot of this concludes. So we'll see. You can see we're already starting to make our way up. So we're going to dive into the dominance of things, and we're going to get a good idea as to how Cardano's dominance changes. You can see here at the peak of this is January of 2021. Cardano's dominance was only 0.74%. Okay. Very, very interesting. It's at its biggest points, like over here, it didn't even exist. So when it was first introduced, its first real market entry, I mean, it was around 2-3%. And that was when Bitcoin's dominance was like 35%. It's insane. I know that there were several points here. I got to find them. Something seems off on this, honestly, because I'm looking at this and I'm like, I know there were several points where Cardano's dominance was around the 4% range. There it is. Okay, so there's 3, it's climbing. Where'd it go? I saw it flash at me. 4.22%. That was August 29th of 2021. And that was when Bitcoin, its dominance was down 42.27%. So when Bitcoin's dominance declines, you can see the 4.22% went to ADA. Okay, so that is pretty dramatic. And that's not the only instance. I know there were many others, but I want to assume, let's just say even when Bitcoin peaks out. So let's see, at the second peak, Cardano's dominance at the time was 2.40%. That was at Bitcoin's second peak of the market when it was down 41.6%. So we have to understand, when we have to kind of think, what happens with Bitcoin, or what happens with Cardano when effectively Bitcoin's dominance has come down substantially, which I'm sure it's going to. It always does. Does it come all the way back down to 40%? Maybe it does. We'll see. But when that happens, that's when Cardano really starts to rise up. And even though the dominance of Bitcoin can come down, and it will, the price still continues to rise. It's just a lot of the value, a lot of that liquidity starts flowing into the altcoin market, because everybody knows you can build up into like what's considered the safest asset in the market space, Bitcoin, but you're not going to get those 5, 6, 10x gains pretty much no matter what happens in the market. That volatility is being condensed, and we're moving up steadily over time rather than huge spikes and substantial drops. So that's basically what we're looking at there. Okay, so obviously you're here because you really want to know what is my updated Cardano price prediction. And I'm going to give it to you straight up on what I think is going to be happening here moving forward. I've been trying to kind of lay out a multitude of cases that can kind of help you understand the cycle and what I think is going on. And we're going to break this down a little bit further. Let's look first at the total market capitalization of well, this is market cap of Bitcoin. Okay, so this is just Bitcoin, folks. And if we look at the way it's changed from peak to peak, okay, we can look at the peak of 2013 into 2017, and it rose up $280 billion. This is pre-institution, okay? It wasn't until 2017 that the CME futures even entered the space, and they started talking about how they're going to tame Bitcoin and everything else. They're patting themselves on the back and all that fun stuff. Cool. But the total market cap rose about 2,209%. From that peak to the 2021 peak, the second peak in November of 2021, it rose another $923 billion. That was about 302%. Now, what's the narrative? Institutions are entering the play. Spot ETFs for Bitcoin and other assets. They're popping up. There's 13 or 20 of them lined up right now, ready for approval. There's a lot of stuff sitting. We have basically a market that is waiting for regulatory frameworks to enter the space, starting with stable tokens. We have so many different things lining up right now. We have folks like Larry Fink. What is he talking about? He's talking about this. By February of 2025, this value had increased to $124 trillion. This is the total value of the global stock market. This is not taking into account real world assets, which we know, as we've been playing with all of the different gimmicky versions of NFTs and this new technology, NFTs value really holds with real assets. An example is like my Billy Bolt's book. It's a book, but it's also available on book.io as an NFT. You can read it, you own it, you know, it's yours, it's on chain. It's minted, right? There's only so many. There's 525 of them. If 525 of those books sell out and I continue doing my job with promoting Billy Bolt's, writing new books, all of that, those become potentially valuable someday. And it's just a fictional novel. What happens when you're doing this with property, which we've already seen starting to happen? There's a transition happening, slow but happening, with people minting their real asset, commercial property, commercial real estate, residential real estate, and they're putting them on chain and they're selling them as NFTs. You can fractionalize these NFTs. This is just real world assets, and that's not even accounted for in this $124 trillion valuation of just the traditional stock market on a global scale. So this is something that Larry Fink of BlackRock, who, remember, folks, Larry Fink, BlackRock, Vanguard, they buy up a lot of residential homes, a lot of homes for sale in any neighborhood at some point, like a couple of years ago, I think. Anything under $300,000, they bought. And they were buying entire zones, entire blocks, neighborhoods, you name it. They were gobbling them up. Why are they doing that? Well, one, a part of the left-wing agenda ultimately is that you'll own nothing and be happy. They want everybody to rent everything from them. They want to be able to control the purse strings, what you spend, what you do, what you see, you know, what you spend your money on, what kind of food you eat. I mean, they want to control everything down to the letter, and they want to tax it all in droves. Okay, let's just be real about what. Now, a lot of that has been starting to crumble, thank goodness, but it doesn't take away from the very idea that all of these assets are going to be tokenized. The traditional stock market, the NASDAQ, S&P 500, all of that is going to be tokenized. And when it does, that's hundreds of trillions of dollars entering the blockchain space using what? Using Bitcoin, most likely as its store of value, which is going to offset and just catapult beyond gold, which is why I don't even think that's a part of the equation anymore. It's finite. There's only ever going to be 21 million, probably a couple, if not a few million Bitcoin have been lost, whether from lost keys or whatever, right? Landfills right now are probably worth more than a lot of the properties and real estate surrounding them because of the lost keys that are sitting in landfills. Okay. So, you know, that is the narrative, and this is happening. So when we look at the rise and changes in Bitcoin's market cap, while I want to be conservative, I believe that just about anything is possible. So if I look at the peak of the 2021 market and I were to just move that and say, well, what if something similar happened from this peak to that peak? That takes us to around $5.34 trillion in Bitcoin alone. This is absolutely possible, and we're starting the ascent into that. Now, if we're looking at a potential October 2025 peak that maybe it spills into November, which is likely, it could happen, right? But I'm going to be looking for that peak in October. You know, we have this much time to reach this point. So this should continue being an up-only situation as assets enter the market. What's going to happen when all of these spot ETFs, okay, we've got a bunch of spot Bitcoin ETFs. What happens when we have a lot of trade activity and new money flowing into the space because of all the people that they're like, you know what, Bitcoin's nice, but I'd rather have Cardano because I know Bitcoin's only going to go up so far. I don't want a 2x return. I want a 10x return or a 5x or a 30x. So a lot of these spot ETFs that are basically earmarked for the altcoin market, That's actually going to add a lot to this as well, even though this is just Bitcoin, because a lot of that liquidity is going to flow back and forth in a lot of ways. And there's a lot of hedging, a lot of leverage. There's going to be a lot of stuff associated with a lot of these different vehicles. And so, yes, this is very likely possible. So what does that mean in the grand scheme of a Cardano price prediction? Okay. It's very simple. We can look at Grok, as I asked him. I said, Grok, if Bitcoin reaches a $5 trillion market cap with a 45% dominance. Now, keep in mind, last market cycle, it dropped lower. It was lower than 40%. It was around 40%. Let's just say maybe it only gets to 45% this cycle. Maybe it's only 50. I don't know. But the overall market capitalization is going to continue growing. Cardano ADA's price would be approximately $9. That's at a 3% dominance. So let's just say that if Bitcoin's dominance is actually a little bit higher, but Cardano only reaches 3% of that dominance, we're still looking at $9. If it reaches a $5 trillion market cap, this is in part of the total crypto market capitalization, which would probably be like $10 trillion. Okay. But if it were at a 4% dominance, this would be about $12 in ADA. And if it were to somehow reach a 5% dominance, which, believe it or not, I think is possible, absolutely possible, we're looking at $15. Why do I believe this is possible? This is also based off of 37 billion ADA in circulating supply. Why do I think this is possible? Well, there's a lot of different reasons for this. Many of you that watch this channel already know what they are. Obviously, Bitcoin OS and IOHK's version of Bitcoin OS that they're working on, they're slowly unveiling bits and pieces of this stuff. It's playing out right now. Bitcoin 2025, I think, is going to be a very memorable event. I kind of wish I was going, but I'm not. I get messaged all the time. I really don't like that flight to Vegas. I just don't like going to Vegas, quite honestly. It's like not my thing. If it were in Miami, I'd have gone. I'd be ready to go, but it's not. But you guys have fun. I'm sure it's going to be a great time. I'm pretty. JD Vance is speaking at this thing. It's going to be an interesting show. And they're also going to be doing these live demos of like IOHK and Bitcoin OS and all of this stuff. And basically, these aren't bridges, folks. These are ways to basically use the same wallet for Bitcoin and Cardano and all of the liquidity in Bitcoin. Let's just say it's $5 trillion. It can flow directly into Cardano, take advantage of all of Cardano's smart contracts, ecosystems, DeFi, Web3. Like, you'll be able to effectively play cornucopias utilizing Bitcoin directly throughout that system. That's a pretty big deal. And that's not anything that any other asset, any other Web3, anything else, it's not going to exist for anything else. It's only possible because Cardano was built on the EUTXO, the extended UTXO model, which was basically the foundation for Bitcoin. So they're already like brother and sister, right? I mean, they're basically the same thing, but Cardano has extended upon that model with smart contracts and all this other functionality that just continues to grow. What happens when Laos launches? Probably isn't going to launch this year, but when it does launch, probably, my guess, like everything else Cardano does, Laos is going to launch like 5 days or a week after the peak of the entire market cycle, because that just seems to be the way they time everything. I don't understand why, but that's the way generally the cookie crumbles. But it's going to be substantial. And are we even going to have a significant peak, a drop, and all of that? Or are we going to just get a little psych out? Maybe we drop 30-40% and then we start rising up and continue on to new all-time highs into 2026. And then everybody says, see, I told you this market cycle was going to continue on. We already got a flavor of that, a taste of that in the 2021 market. That's definitely at play, okay? But I think that there probably is going to be a bit of a difference between what Bitcoin does long-term and what the rest of the altcoin markets do long-term. I think it's going to be different. If anything, maybe Bitcoin doesn't have the typical cycles that we know, but the altcoin market does. That'll be a question. Bookmark this. Let's find out how accurate that is. But effectively, what I think is going to happen is a lot of this liquidity is going to flow into Cardano. I actually believe that Cardano's dominance this market cycle could go well beyond 4, 5, and even 6% because of this liquidity, because of the nature of Bitcoin, Cardano working together. Not only that, but I know that the airdrop for midnight, Cardano's partner chain privacy system, all of that is good. The airdrop is going to happen this summer. The launch for midnight, the official launch for midnight as a protocol, as a partner chain, a 4th generation blockchain working hand in hand with Cardano, that also then becomes a privacy layer for Bitcoin and any other blockchain that we build partnerships with, whether that's Ripple's XRP or whatever the case may be. That airdrop is going to be substantial. That's going to happen this summer. Nobody still knows what's coming with that yet, or how. Is it going to be based on a snapshot from a certain date? Is it going to be, how is that going to play out? Nobody knows. Apparently, I'm going to be a part of it, but I still have no details on any of that. So we'll see. Stay tuned. Subscribe if you want to, stay abreast of that. Because from what I understand, it's going to be a very small number of YouTubers that are going to be playing a role, some kind of role in this effective launch of the airdrop and everything else. So I'm excited about it, but I wish I had more details. I really don't. So I'm waiting on that, but that is going to be a substantial play. So between the Bitcoin OS, midnight, the airdrop, the launch of that, which is probably going to be, sometime in I'm guessing 4th quarter of 2025, that is going to be a huge catalyst for all of this stuff that's going to pull a lot of this Bitcoin and overall total market cap dominance into Cardano. I believe that is when we see Cardano officially flip Ethereum, and I do believe it's possible. Everybody's been trying to say that this is the Ethereum killer. This is the Ethereum killer. I don't think Ethereum's going to die. As we've seen with its recent pump, it's still alive, it's breathing, but it's like, with anything else. I've never been hunting, but, I know that you kind of get the shakes and stuff with the, if you're hunting something and, the nerves kind of go crazy for a minute. And that's kind of the way I look at Ethereum. I believe that the Ethereum pump recently is really nothing more to do with than just Trump and World Liberty buying it and them talking about it and everybody speculating on it, even though they're announcing some upgrades and they're trying to work on it, but they have been since the beginning, and none of that stuff has ever actually solidified any significant places, Ethereum being in second to Bitcoin, outside of its history in DeFi. Okay. And nobody can take anything away from Ethereum in that regard, but Cardano is about to catch up and surpass it. There are a lot of other blockchains that have been like eyeballing that spot, but this one's just all a smoke and mirrors, a bunch of bullshit nonsense. It's all controlled narratives for VC gains at the expense of its investors. Everything is a gimmick. Everything is a smoke screen. It's all fake numbers, bots, and wash trading. That's terrible. That I don't suspect is going to go very far. I really do still believe that this is going to be that change last market cycle, but we'll see. And then you've got a lot of others that are really good. I mean, we have some like ICP that I was really bullish on. It just doesn't move. Their methodology behind the way they release this shit, it's nonsensical. They don't really have a really solid plan in marketing how the technology can benefit people, and they don't really yet have any major use cases that are utilizing it in a way that tells people, oh, I get it. They don't even have a lot of the gimmickry. Right? You should at least be able to participate in the gimmickry, the meme coins, the NFTs, a lot of the silly stuff that at least draws eyeballs and shows people that your technology is capable of XYZ with a multitude of other use case potentials. And we just don't see that with ICP. You can have the best technology in the world, but if nobody's using it for anything at all, not even to just have fun. Like I wanted to launch a website on ICP with canisters and all that stuff. And I was looking into it. I'm like, this is just no, I don't have time to deal with all this shit. So they need to simplify not only their message, but their use case and the way you can take advantage of these technologies. And until they do, I don't see ICP going that far. Maybe in 10 years, who knows? Maybe it's a 2030 play, but I don't think it's going to do much this term. So all of that being said, you know, we're looking at, you know, I'm still going to say between let's just say between $5 to $15 with the potential for a blow off top starting at any one of these price points, given where we're at in the market cycle. And that's my Cardano price prediction. Hopefully this video helps you understand kind of where we've been, where we're at, and what is expected for the future. As Pat Bet David always says, the future looks bright.